Hello and welcome to ISST's podcast series, Digital Dilemmas Women at Work. This series dives into the complex intersections of gender and digitalization of work, exploring how evolving workspaces are reshaping women's roles and opportunities. Each episode highlights stories of resilience and explores strategies for inclusive and equitable digital futures for women. This podcast aims to spark dialogue around solutions that center women in digital transitions and work policies. Hello, everyone, and welcome to another brand new episode of Digital Dilemmas. Today, we have a wonderful academician, expert, and also a dear friend. We have Ruth Castel-Branco from the University of Witwatersrand. Ruth is a senior researcher at the Southern Center for Inequality Studies at the University of Witwatersrand. Her research is focused on casualization of labor, worker organizing, and the redistributive role of the state. She holds a PhD in sociology from the University of Witwatersrand. Welcome, Ruth.
Thank you so much, Anweshaa. It's such a pleasure to join you for this podcast.
So, today, Ruth and I are going to unpack some realities and dilemmas around digitalization of women's informal work and its implications for social protection, which has been Ruth's work for some decades now. I think we'll start with the basics, Ruth. What does social protection encompass? And why is a robust framework critical for women informal workers?
So, social protection really encompasses a range of benefit from healthcare to education to income support that protect people from contingencies along the life cycle, really thinking about early childhood, first months of birth, right up to the end of life, in old age. So, in the area of income support, the primary mechanism is Social Security. And within Social Security, there's two pillars essentially there's social insurance and social assistance. So, social insurance is, the traditional social insurance pension funds that were historically tied to employment, generally financed through contributions of workers and employers, sometimes with some level of subsidization from the state, where the levels of benefits depended really on workers' contributory histories, how long they contributed for, how much they contributed to the funds. So while there's some level of redistribution through minimum pensions and maximum pensions, really it's based on workers' contributory histories. And in much of the global south, certainly in countries with high levels of informality or unemployment, as is the case in South Africa, where I am, these are very limited in coverage because a huge swath of workers are excluded from them because they don't have this long contributory history through their employment. The second pillar is social assistance or social grants or cash transfers. People call them different things in different countries, but which has been historically limited to vulnerable groups: children, malnourished mothers, the elderly, often means tested, the poor, etc., financed through the general budget, primarily taxes. In countries like Mozambique, where I'm originally from, they're donor dependent as well, so international financial institutions. And here the levels of benefits are set by the government across the board based on the characteristics of potential beneficiaries. And they have the potential in the global south for much higher levels of coverage. But they actually tend to be quite limited in scope, primarily due to the lack of adequate state investment. In other words, budget allocations to social assistance or social grants programs are just insufficient to meet the needs of all of the people who could potentially receive them. And we often see this exclusion happen in various ways. One of them is through the design. So, across the African continent, for instance, it's very rare to have social grant schemes for able bodied adults of working age. There's this prevailing idea that if you have the strength to work, then you should be able to earn an income, right? Regardless of whether you have high unemployment in a country or not. And as a result, in the context of rationing for Social Security, there's some consensus that the elderly are deserving of a social grant, but there's far less consensus about whether working age adults are deserving of those. Sometimes the exclusions happen through implementation. So, for instance, in Mozambique, in the context of limits on budget allocations, government may say to local administrations, identify X number of people for this program. And then there's a de facto means testing that happens on the ground that isn't really aligned with what is defined in the policy. And oftentimes the exclusion happens through both mechanisms. Now, why this is important for women informal workers, well, is that informal workers are one of the groups that have been historically excluded from the Social Security system. On the one hand, their work is informalized. They may earn too little to be able to contribute to social insurance schemes. And on the other hand, they earn too much or are not defined as a vulnerable category to benefit from social assistance. So they become part of what is defined as the missing middle. And on the African continent, the missing middle is 87% on average of all working age adults. And so there's a real sort of concern with what it means that this group is excluded from social protection. And obviously, women are disproportionately excluded because they're disproportionately represented in the informal economy, and particularly in the lower rungs of the informal economy. In other words, the most survivalist activities of the informal economy. And, if you look at the double burden that women face, they also have greater social security needs throughout their life cycle, whether it's maternity protection during pregnancy and after birth in order to ensure their health and the health of their child, whether it's caring for children as they're growing or for the elderly. And this, of course, this kind of burden of unpaid care work has been exacerbated through privatization or rollback of public services. So women have often had to step in where socialized care might otherwise play a role.
Thank you, Ruth, for laying the very basics of what social protection is and what does it mean for a marginalized women informal worker. I think it's very similar to the case in India as well. Women in India tend to be working in the poorest, informal work. Where they are vulnerable. And these are the women who, as you said, require social protection the most. Now, speaking of this, since the COVID pandemic, we have suddenly seen governments investing in a lot of digitalization. And on one hand, the idea is because you digitize systems, you will have lesser duplication, lesser flaws, etc. And probably there'll be a better delivery mechanism and all of that. But what lessons do you think have emerged? This layer of digitalization, vis-a-vis two things. One is A, access, and then B, say, equitable implementation. What does it now mean for a woman to actually move forward and access this social security or social protection mechanisms through this layer of digitalization?
It's interesting. The pandemic was this site of experimentation for social protection. And on the one hand, there was greater political appetite and therefore fiscal space for social protection initiatives, partially because it was the lockdown measures instituted by the state to reduce the spread of the virus that created the crisis. So it was a state induced crisis for which they had to, for their own legitimacy in terms of public health policy, they had to respond somehow. And that opened up the political space to introduce all sorts of emergency social protection responses, including unconditional cash transfers for able bodied adults of working age, which all of a sudden expanded the scope of who was considered deserving and who had access to these grants. And so in South Africa, for instance, we still have a grant in place that's from the COVID period called the Social Relief of Distress Grant. Initially, in the South African case, it actually discriminated against women because the implementation strategy that they had was that if you already received a grant, you weren't eligible for this grant. And oftentimes in South Africa, there is already a childcare grant in place. And oftentimes it's women as the primary caregivers that receive this childcare grant. Now, this grant is not for them, it's for their children, though we know, of course, at the household level, the grants are, redistributed. But what it meant was that women in the first instance weren't eligible for this social relief of distress grant that was really directed at able-bodied adults of working age who did not have an income. That was then challenged, including in the courts, and eligibility was then extended to women who were already receiving a caregiver grant. But there was a kind of interesting debate about, what kind of targeting do you have, or selection mechanisms do you have, and how do you not, given the existing social protection frameworks that are already there, how do you not actually undermine women's access to social security? I think the other thing that came from the pandemic was this imperative to distribute cash transfers quickly to remote areas, and to do so remotely because of the lockdown measures. And I think that highlighted, on the one hand, how ill prepared we were for the kind of quick response, because we didn't have, in many countries, the adequate information management systems with the records to even know who these grants should go to. The level of digital coverage and digital literacy was very limited, and the state bureaucracies were themselves not oriented towards digital transfers. And so what that did was that it created a kind of a drive to outsource digital payment of social grants. And particularly in countries that rely heavily on international development agencies, for Mozambique as an example, those decisions, those policy decisions, were actually based on sort of an international blueprint that was putting forward that assumed that outsourcing to financial services providers was necessarily more effective and efficient than trying to modernize the state. And in the case of Mozambique, that argument did not hold. And so actually, they ended up outsourcing the payment system to a very well established telecom company called Vodacom that had absolutely no infrastructure to administer cash transfers, and that relies on a kind of network of self employed mobile money agents for its regular operations. But of course, there's major questions about whether you can put entitlement based programs that have involve confidential information that require regularity, et cetera, if you can put all of that administrative responsibility onto self-employed mobile money agents. And the outcome of that was actually, they couldn't do that. I think the other challenge that emerged in many countries, including Mozambique, was that actually this outsourcing wasn't cheaper. So oftentimes we hear the argument for the privatization of particular functions in public provisioning is that it's going to be more efficient because of the markets, et cetera. But actually, governments have to make, in order for this to be um, attractive, right, to large companies like Vodacom, governments have to make it profitable for them. And that involves de-risking their investments, right, or what's called risk proofing their assets. And there's a lot of development agencies are now pushing this line. You can have favorable regulations for financial capital, fiscal exemptions, access to grants and government-backed loans, public-private partnerships, et cetera. And the poorer or the more fragile the state, then the higher the financial risk, and then the more governments are expected to absorb. So in the case of Mozambique, the administrative costs for the outsourced program that ended up not being able to effectively deliver the cash transfers was over 50% of the total budget allocated, in comparison with government programs administered by public servants, which was 12%. And ultimately, because Vodacom in that case wasn't able to deliver the grants, the program then had to be taken in house anyway. And so I think that raises questions. Obviously, there's many cases where digitalization is successful. South Africa, where I am, is one of them. There, other problems arise about the bundling of cash transfers with financial services that often end up trapping people in relations of credit and debt. But I think the whole experience, in the end, I guess, raises a question, which is, does the modernization of the state and the incorporation of digital systems have to happen through the private sector? Can it, why can't it happen through the state? Um, and then what are the things, what are the problems that arise when it does happen through the state? And I know that India has had much more experience of the state taking leadership in the process of digitalization.
While we're talking about the state, I'm also wondering, do legal instruments aid in these kind of matters? I'm trying to think of the India case, and especially for the construction workers board in India, where you do have a 2% mandatory cess that the builders have to contribute from their profit, and that is how then you sort of disperse certain benefits to the workers. And that actually came in very handy during the pandemic, where each registered construction worker was given 5,000 rupees in 2020. But there was a legal instrument. How important do you think policies are in this matter? And what does that mean to have a policy, a state based central policy around social protection?
Yeah, I mean, I think that policy does matter. And we look at South Africa, for instance, where social security is considered a constitutional right. And what that's allowed is for South African civil society to take the South African government to court for the lack of provision of universal comprehensive social security. The Ministry of Finance is always going to say, well, we can't afford it. We've had low levels of growth. We are in a period of austerity. There's no way that we can sustain universal, adequate social protection coverage for everyone, given high levels of unemployment. There's always going to be arguments about how this right should be financed. And in reality, its ability to be delivered hinges on the budget allocations that are made, which are the outcome of political compromises. But I do think that having the law there, whether it's at a constitutional level or the social security law, et cetera, creates a focus of mobilization around which claims can be made. But ultimately, the ability to deliver depends on a range of other factors. It depends on the state's ability to raise revenue, which is itself a political decision about taxation and who to tax and at what level. It depends on the actual allocations that happen to the sector and where those allocations are directed to. And it depends on the actual implementation, all of the micro studies that have been done on how this policy is actually rolled out. We see, for instance, in South Africa, the digital technologies on the one hand have helped people to register remotely. But on the other hand, they've been used to keep people out because only people that had access to the internet, phones or computer, could even register for the social relief of distress grants. And when they were excluded through a machine far away, which meant that they had very little understanding of why they were excluded. We've also seen the government more using the digital technologies to monitor people, to surveil incomes. Social protection coverage is not nearly enough to sustain you, right? It's what, 370 Rand a month, which is about $15, $16 a month. And so that's not enough to sustain somebody. But there's a presumption, therefore, in its design that you're getting income from somewhere else. But the moment that you get income from somewhere else, whether it be through mobile money or a bank account or whatever, the government will cancel your grant. So in that way, it's also made it very difficult for people to actually use the grant as part of a broader strategy of cobbling together a livelihood.
I'm just thinking about the gender digital divide. And what does that mean when we are talking about this inclusion and exclusion from the social protection mechanisms? What kind of examples have you seen in South Africa and Mozambique? And what do you think are the barriers and challenges when we're talking about inclusive and equitable social protection benefits? Yeah.
I mean, I guess the first thing is that there's really a diversity across the countries in Eastern and Southern Africa in terms of digital connectivity, in terms of the gender dimensions of digital connectivity. And part of it is differences between rural and urban. Still to this day, women in rural areas tend to have far less access than men in rural areas. There's a study that's been done that's looking at why that's the case. And it is, these gendered ideas of who should have access to the outside world and what will happen if a woman has access to a phone and has control over the functions of the phone and therefore control, for instance, over her social grants and how to access her social grants and so on. So that's certainly, there. But it's also the case that even in this region, we have both matrilineal and patrilineal societies, right? With it comes different ideas about who actually controls the household, right? So in a matrilineal society, in northern Mozambique, for instance, there's still patriarchy. It's not to say that there's, not a sort of patriarchal matrilineality. But what is the case is that the household is the woman's and the wealth is accumulated through the woman's line. And so that shapes one's access and expectations around the digital in different ways than it would in a patrilineal place. But I think, a place like South Africa, the gender gap is far narrower. And I should say that I think part of that is to do with the fact that we've had social grants for a long time and that they have been administered electronically for a long time. If you look, for instance, at the levels of incorporation into the formal banking system, there's actually no difference between men and women in South Africa, whereas that's not the case in neighboring Mozambique. So that I think also gives us some insights in the long run, and including the digitalization of cash transfers does inevitably change people's use of digitalization because they're propelled to use it. In the short term, however, it creates all sorts of obstacles in terms of access.
You very correctly said it also depends on the historical journey of a nation or a state. In case of India, where there has been a practice of social reforms, social justice. So we also see, it varies in the country. So in the southern states, where there is historically been a process of social justice and social, reforms, one sees much better indicators with regards to, social protection measures, social security measures, as compared to some other parts of the country where we do not see that. But it's also very similar that when we speak about the gender digital divide, yes, women are still do not have access to smartphones. There are gender norms around, when do they use it, why do they use it. Access is still around shared phones. So all of these sort of continue to create a barrier, and that becomes sort of challenges when you want to sort of do a digitally inclusive mechanism. Having said that, it's been interesting in India to in the last decade, I would say, there has been a lot of focus on the woman, especially around elections, etc. Cash transfers being one of the ways of winning votes, especially in the recent state elections. One has seen this sort of focus on the women, as the center of the household narrative being a very important way of actually getting more women also to come out to vote, and their electoral representation has marginally increased as well uh, since the last decade or so. How has been your experience around this in your region?
I mean, it's interesting because the assumption is that social protection is definitely a tool of political parties, and in particular, the parties in power, to mobilize votes. A colleague of mine, Ben Scully, has been doing some work around this in South Africa and has found that actually there isn't a clear correlation between receiving a social grant and supporting the ruling party. In fact, it seems that political attitudes are shaped by people's material lives, and that social grants are not considered life changing, actually. And there's other research also from South Africa by a former colleague of mine called Hannah Dawson that explored this a little bit more. The conundrum was there, why is it that people will protest over service delivery or over jobs, but will not protest over social grants or social protection in quite the same way? And her argument is that while people might support social grants, they don't see them as a demand because they don't see them as life changing. And my work also looked at that in the case of Mozambique. I was looking at a program a little bit like Nrega. It wasn't a job guarantee in the Mozambican case, it was really a conditional cash transfer based on participation in public works programs for X number of months, 3 to 6 months a year. When I asked people, well, how do you think this program should be improved? Do you think we should remove the conditionality? They said, no, we'd like to have a proper job. I think that while people might appreciate receiving some level of income support, at least not in this region, it has not tapped into people's aspirations for their future. They would rather not be dependent on these. And therefore, it doesn't translate so linearly to political support. And I don't know. I mean, it's interesting to think about the gender dimension of it. Neither in South Africa nor Mozambique have I seen a kind of a lifting up of the woman social grant recipients specifically in an attempt for politicians to tap into that constituency. And I'm not sure why.
I want to go back to the role of the community for a bit. We have spoken a lot about the state. I'm just wondering, and then also looking at from a gender lens again, how do you think informal networks, cooperatives, how does the community sort of empower women in informal economy to sort of address the challenges or the barriers to social protection, given the layer of the digitalization in this?
In most of the contexts that I'm looking at, the vast majority of workers, people of working age, still don't have any access to social protection as a right. So the kinds of initiatives in the region, with the exception of South Africa, that still has the social relief of distress grant in place, most countries don't have anything in place for women in the informal sector, neither women nor men. And so there's just the absence of adequate coverage of state administered social grants or social security. And obviously, what that means is people turn to other mechanisms. And we actually saw that during COVID, particularly where there were botched outsourcing experiments and they never really went through. People had to survive somehow. And what we've seen are sort of his long-term kind of strategies of survival that don't rely on the state, that are the outcome of exclusion. Mutual aid funds are very common. In Southern Africa, we have something that's called the stokvel or the shitik, where women in particular contribute on a monthly basis to a fund with a group of 12 people, and you have a kind of rotating savings group. And at the end of the year, you get the amount that has been saved. And in moments of crisis, you can borrow from that fund and then pay back. And then there's, in East Africa, they took the kind of tradition of the agricultural co-op and moved that kind of into an urban setting. So it's not unusual, for instance, for them to set up a savings and credit cooperative. Sometimes it's formal, sometimes it's not, in which the contributors will basically purchase a share in a future activity. So we've seen this, for instance, a lot with platform workers. They will be part of a zone, which is basically a group of people on WhatsApp. But then they might also join a SACO, one of these saving and credit cooperatives, and then they pool their resources to engage in an activity that is totally unrelated to the job they're doing. Maybe they decide they want to build a housing development, and so they start pooling resources to build for that. And once again, you can borrow from a SACO in times of crisis and then pay back the interest. Of course, the problem during COVID was that everybody was in crisis. So it was a moment where you say, okay, what happens when no one has money and everyone wants to borrow? There's also in Mozambique, often other kinds of activities, including agricultural activities, become quite important. When the lockdown measures hit, it was not unusual even for people in urban areas to begin to plant vegetables, right? So that at least you would have an alternative source of sustenance that wasn't based on your income. But again, that depends very much on the climatic conditions. If you have a situation of a climate shock, then it becomes very difficult to rely only on your own production. What we see is, in the absence of the state, is a lot of cobbling together of livelihoods. But if we look at poverty rates across our region, then we realize that actually, despite all of these measures, people are still not able to meet their basic needs, right? And so the answer becomes, in the absence of the state, what do communities do? They try. But that doesn't mean that they always succeed. And I think that cooperatives have a lot of promise in terms of thinking about ownership and control, but we also have to recognize that they have a lot of challenges. And in South Africa, as in Mozambique, the vast majority of cooperatives fail, which doesn't mean that some don't succeed. And so thinking about, what are the structures that can help cooperatives succeed, I think is quite interesting. And I'd be curious to hear more about the Indian case. It's also the case that often cooperatives are led by men. And so that unless there's an explicit decision that it will be a woman only cooperative, oftentimes they end up reproducing a gender division of labor in which you effectively have a boss, leadership, and then you have people who are working. And of course, that also, those asymmetries in power also then lead to an asymmetry in the distribution of the resources themselves, which is why there's often, cases and accusations of mismanagement. But, we need to learn from the successful cases, because these are ultimately various tools at our disposal.
I mean, India has had a long history of the cooperative movement and self help groups that are created as part of national schemes and missions. It's been part of, historically, politically, been part of the country. I think one very big and interesting example would be that of the SEVA, Self Employed Women's Association, how they have come up with a SEVA Bank, a central trade union of women informal workers, and how they are granting insurance, and how they are talking about credit, and what does that mean, and having that helps you with really low interest to sort of pay back your loans, etc. I think that has been a model that's been quite successful. It's designed around the realities of a woman in informal economy, and I think that has been a very interesting eye opener. Not only just looking at it from how credit worthy she is, or but how interestingly it has changed her life position within the family, the community. What does it do to her aspirations as a woman, as a person in the community? How has that led to massive changes in the sort of power relationships that one looks at? It'll be really interesting if you could also tell us maybe an example of a robust social protection mechanism that you've seen that has actually helped in shifting powers for women informal labor.
I think that there's cooperatives that have been very successful, associations that have also been very successful. I'm thinking, for instance, in Kenya, there's an association called the Divas Association that came out of the platform economy. It came out of women platform drivers in Nairobi who both felt that they needed to organize to make demands from the platform company, but also to protect themselves from other male drivers in the e hailing sector. And they came together as an association, doing lobbying, doing organizing, and providing some level of mutual aid, eventually decided to team up with the Union of Transport Workers, though insisted that they have a women's desk within the union, because the Transport Workers Union is historically a male dominated space, and have through that relationship leverage state social security mechanisms. So in Kenya, there's a national social security fund, and they've then acted as a sort of intermediary between that fund and the group of women drivers, to basically extend social insurance to women drivers. In Mozambique, we've seen a similar story with domestic workers union that started as an association, became a union, and have facilitated domestic workers access to the formal social security system in Mozambique. I think the challenge that exists, particularly as these social insurance schemes try to extend their reach beyond the formal sector into the informal sector, I think the challenge that exists is, well, who is cross subsidizing their contributions? So workers are contributing, but who is the other side of that equation? And I think that's easier in a context like the platform economy because it may simply involve regulating that platform companies are responsible for contributing to workers' contributions. So there's a regulatory component that needs to take place there. Or in India, maybe, like the customer plays a role. But I think that there's also cases where it's not so easy to identify who the employer actually is, right? And for instance, with street vendors or people who are legitimately self employed, and there it's incumbent on the state to develop some kind of mechanism for cross subsidization. I think as much as there are initiatives that offer insights into sort of the importance of self organization. In our instances where self organization has really had a successful impact is where it's been connected to the state and where demands have been made of the state as well. And sort of going back to thinking about the ways in which digital technologies are restructuring work, the rise of the platform economy, and so on. I think what we've seen is, on the one hand, that employment relationships have been muddled by the digital. And so many digital platforms will say, we don't employ the workers, they are self employed, we're simply a tech intermediary. As a result, they don't contribute directly to workers' social security funds, which was historically how, at least in the formal sector, you could hold capital to account. I think that when that relationship starts to break down, you have two choices. Either you regulate to say, well, actually, there is an employment relationship, or at least a relationship of subordination, which makes these platforms responsible for workers' social reproduction, and they shall contribute directly. And you also need to figure out how to tax these platforms in order to be able to cross subsidize workers' social security. And that's become very difficult because these platforms are often registered in tax havens, they're footloose. And as a result, you have to create really international mechanisms to be able to calculate where is value being produced and therefore where is it being taxed. Those are debates that are happening now, right, about the taxation of digital services. But I think that it would require some rethinking around the global sort of tax infrastructure. The other thing is that if we look at, sort of the trajectory of taxation globally, we've seen a gradual decline in corporate tax. And in fact, we just did a study that was looking at a sort of alternative sources of financing for Social Security. And we ended up in a really boring conclusion, which was that if we're to expand Social Security coverage, we need to have more government resources allocated to it, which means governments need to generate more revenue. And actually, they can do that through increasing corporate tax, which obviously governments are reluctant to do so precisely because capital has become more footloose. There's other initiatives that have emerged as well within the debates around digitalization. One are robot taxes, essentially taxing capital intensive firms more than labor intensive firms. In other words, either you could say, think of it as punishing automation or rewarding or labor intensive production, but thinking about this kind of robot tax. And the other one is wealth taxes. I mean, the digital era has led to the tremendous concentration of capital across sectors and geographies. And I think there's a real question for governments on how to claw back some of that value. What's difficult there is precisely that there's been a concentration in geographies. So, also, what would it look like to tax big tech in a way that adequately represent the ways in which big tech has been able to accumulate value from the rest of the world? What kind of redistribution would be required? So I think those are the kinds of questions that we're thinking about now in terms of how do you hold capital accountable, both directly by regulating and ensuring that where there is a relationship of subordination, capital is contributing directly to workers' social security funds, but also through taxation.
I think coming almost to the end of the episode, I'm just wondering if like a broad stroke question on what do you envisage are the digital dilemmas going forward for women in the informal economy vis-a-vis access implementation of social protection measures, given that on one hand we have a state that is weakening, and on the other hand we see a lot of these digitized platforms growing, profiting from the value that these women bring in, and gross inequality in that profiting.
Well, I think that the number one question is what is the investment that's going into social protection systems across the world? That then touches on the issues that we've raised around revenue generation, around budget priorities, around investment, but also there's an issue around who we consider to be deserving of social protection. Social protection systems were built on the idea of a male breadwinner and in a particular model through which people could access social protection. Women, oftentimes, to the extent that they were associated to someone in the formal sector, which was not always the case, but they accessed the sort of historical forms of social security, social insurance through the male breadwinner, right? That is has proven both exclusionary to women, also to men in the context of widespread informality. And so I think that there is a need for governments to commit to provision of universal and adequate social protection, and how to do that and how to becomes important. And that's not just a financial question, it's not just a political question, it is also a narrative question about us understanding the causes of vulnerabilities and the role of the state in response. I do also think that there are a lot of experiments that are happening. And I'm quite interested in the ways in which sort of established institutions of or representatives of existing social forces, um, uh, trade unions, feminist organizations, and so on, respond to those experiments. And we've seen. I gave the example of the Diva Association in Kenya, where there's some kind of alignment with its problems and between self-organized groups and trade unions that consolidates over time. But we also have examples where that hasn't been the case. But trying to understand the nature of self-organization and the way that it engages with or could engage with other established forms of organization, and what the benefits of that would be, I think would be important. And on the digitization, digital technologies offer many opportunities. um, I think that there has to be some thinking about what it means to modernize as a state. Is it done through outsourcing, or is it done through strengthening internal bureaucracies to be able to deliver the services that they've committed to deliver? And there are trade offs. It's difficult to do both well. I also think there's a question about how, I suppose, digital technologies should be used by government when they are used, because the evidence suggests that they're being used to exclude, to surveil, to rationalize provisioning. But they can also be used to plan, to expand services. And so ultimately, I think that those are research questions, but they're really political questions that are shaped by the nature of mobilization and the relative power of social forces. I guess at the end of the day, what technology is used by whom and for what purpose are political questions that touch on the distribution of power. And that includes, I think, for feminists, and can shape the power relations between men and women in society.
Another question: do you think it's time to reimagine the entire narrative of social protection, given these highly vulnerable jobs that are being created by digital platforms, increasing digital means of payments, ways of accessing your simple benefits that you were able to do by just walking into a brick and mortar infrastructure? Do you think we really need to start reimagining in the next 10 years a different model, maybe?
Well, I think that's an interesting question. I think at its core, what I see social protection as is a redistributive mechanism within the other kinds of redistributive tools that exist, including the adequate provision of public services, water, sanitation, health, education, housing, etc. It's no good to put one's eggs all in the social security basket if actually, public services are being rolled back and the cost of living is increasing dramatically, because it will neutralize any effect of expanding existing forms of income support. To the extent that the objective is comprehensive and adequate income support for all across the life cycle, I think that objective is still relevant. The question becomes, what are the mechanisms through which to guarantee that income support? And here I am a big advocate of continuing to think about both a contributory mechanism like social insurance and expanding non-contributory schemes like social assistance or social grants, potentially even bringing them into the same administration and even bringing them into the same kind of framework for entitlements. And the reason for that is that really these schemes, they often offer different benefits, but they're fundamentally different financing mechanisms more than they are necessarily a vision about where it is that we want to go. So I would hold on to the vision of where it is that we want to go, which is comprehensive and adequate income support throughout the life cycle, combined with these other public services. And then have a discussion about how to finance that. That obviously will be shaped by one's analysis of the labor market and the regulations and so on. But what's important is not to let capital off the hook. Some of the debates that have happened, and we see the World Bank, for instance, has argued that, well, the future is precarious labor and it's up to government to provide universal basic income. And this is the strategy, the best strategy, because anyway, the very few people benefit from the existing social insurance schemes. The problem with that argument is that it puts the onus on governments to provide social security without having a discussion about where the income generation for that will come from. And of course, these proposals are coming on the back of various neoliberal reforms that resulted in the precaritization of labor, but also undermined the capacity of the state, the redistributive capacity of the state. So the only thing you're going to get out of that sort of path are very, even if universal, very low levels of benefits, right? And obviously, we want to have the kind of income support that can actually sustain people through their life cycle. In our research, we sort of push back against that line and say, no, actually, what we need is to envision the kind of social security system or social protection system we want. And then to build an economic policy around that can sustain that. Right? That social protection shouldn't be a residual category, something that you fill in when all these things have failed, but rather it should shape the decisions that we're making around labor market policy, around industrial policy, et cetera, so that we can actually guarantee adequate and comprehensive social protection.
Great. I think this conversation has been very, very interesting for me personally. And we have spoken about, it's not just about this versus that, but a combination that works. We have spoken about the historicity of where social protection has come up, which is often male centric. We have spoken about the state's accountability and responsibility, the importance of financing, especially in crisis periods, different models and not letting the capital off the hook. I think that has been another very important point that has been made. We have also spoken about some of the digital dilemmas in terms of, how do you sort of access, but at the same time, the kind of newer jobs that are becoming more and more precarious by the day. And what does that mean when we're speaking about digital platforms, and what is the role and accountability of these, and how we can sort of think of them becoming an actors and participatory actors in having a more robust social protection mechanisms through them. We've also spoke about having absolutely important, and non-negotiable is to having a gender lens and an intersectional lens when we are talking about designing social protection mechanisms, because oftentimes it's more exclusionary. The plan is more exclusionary than it. I completely agree that the intent has to be very, very clear when we are talking about social protection and when we are designing anything. And then we think about, where is it going to be financed from. So thank you so much, Dr. Ruth. It has been an absolute pleasure to speak to you, to listen to you as always. And I hope our listeners have also had a wonderful time listening into this conversation and have learned. And it'll be great if you can send your comments around this. Stay tuned for more such episodes of Digital Dilemma. And please share and subscribe to this channel. Thank you, Ruth. Thank you so
Thanks
much.
so much. Thanks so much, Anisha.